storm. We got some nice little break in the weather, but it's about ready to get very, very rainy. They say up to an inch or more, inch and a half of rain that's coming. So actually kind of looking forward to that. But in today's video, we are going to be talking about the unsustainable debt path that the United States is on. Somebody had commented, they said they wish that I would talk about the national debt and what it is that we can do about it. And the very interesting thing about this is that there's really nothing that can be done. There's one direction that it'll go. It will expand. It has to expand going into the future. Any other direction would then mean a total and utter collapse for everything out there and everyone. Now, not saying that it can't just pull back a little ways, but ultimately it's ever expanding amounts of debt, currency issuance, war, separation. That's the thing that's going to be coming. However, people are concerned about their own personal well-being and what it means for their retirement and what it is that they are going to do in the later years of their life. And a lot of times people are relying on Social Security. And so one of the things that people have asked me is just like, is Social Security going to be there? And my answer has always been the same. The United States can pay any debt it wants for as far out into the future. What it cannot promise is the purchasing power of that currency. And now I got two links that I'm going to leave down in the description. The Federal Reserve admits this. I mean, Greenspan admitted it back in, what was it, 2005, right? And I mean, probably many times before that. But just listen to what he says here. Let me bring it up and then we'll play it here real quick.
Are U.S. Treasury bonds still safe to invest in?
Talking about
Very
bonds.
much so. I think this is not an issue of credit rating. The United States can pay any debt it has because we can always print money to do that. So there is zero probability of default.
Now, zero probability of default. That is the biggest issue that most people end up looking at when it comes to the United States and the bond rating. Like, if they default, why would they default? They're going to pay it. Always. Every single time, there will be zero doubt in my mind that they will pay it. Now, there are questionable acts that could take place during times of crisis in which that the Federal Reserve may be able to step up and intervene and do things that is saying buy the toxic treasuries that are not paying in order to make sure that the treasury market stays liquid. This is a whole other question. But ultimately, the United States has that printing press in order to pay any debt it wants. But it knows, they know for a fact that there needs to be real assets behind it. And that is the biggest question. See, you can make the number whatever you want. You can say, hey, I'm going to promise to pay you this much into the future and then spit out the money and there it is, right? But can that pay for a real asset? Can that provide you with the ability to sustain your life? Buy the utilities, buy the gasoline, buy the food, buy whatever it is that you need to live. Greenspan addresses that very issue back in 2005. I mean, this is like, 20 years ago.
Do you still believe that we should maintain the fundamental principles of Social Security as it did in 83?
I think we should maintain the principles of Social Security, but I think the existing structure is not working, and that until we can construct a system which creates the savings that are required to build the real assets.
Until we have a structure that can build the savings which is required for the real asset. Like, listen to this again. Let me back it up.
The savings that are required to build the real assets so that the retirees have real goods and services.
See, you can't just fake it. You can't just print up the money and just say, hey, everybody here, there's a bunch of money. Right? You got to have the real assets behind it. You think about right now, so many people have asked me, it was just like, why is everybody loading up on gold? Why is and I'm thinking, well, do you ever think about what the real asset is? Right? Dollars are good for one thing, right? They're good for one thing, to transfer goods and services to other goods and services. They do not hold value, and that's the problem, is that people anticipate they will. If I get paid this much, then I should be able to hold on to that purchasing power going into the future. And that's just simply not the case. Greenspan knows it. He says, hey, we got this system in play that we can, deliver funds to the people. The only problem that we have is that if we deliver the funds to them, they may not be able to buy anything with it because there's no real assets backing it. All right, let me play it again.
Required to build the real assets so that the retirees have real goods and services. We don't have a system that's working. We have one that basically moves cash around, and we can guarantee cash benefits as far out and at whatever size you like. But we
Right? You can pay any bill. That's not the problem. Paying the bill isn't the problem. Right? People are like, how are we going to do this? How are we going to... And it's like that part isn't the problem. Paying the bill is not the problem at all. What happens when you get the money and the money doesn't do anything? See, that's the scariest part. Greenspan knows it. He's addressed it 20 years ago. This problem is only getting worse. It's not getting better. Right? Listen to it again.
basically moves cash around, and we can guarantee cash benefits as far out and at whatever size you like, but we cannot guarantee the purchasing power. And this is why the issue ultimately has got to be resolved in terms of, do we have the material goods and services that people will need?
Do we have the material goods and services? See, back in the day when we were a manufacturing powerhouse producing the world's greatest stuff in the world and sending that stuff out there to the world, and the world was sending us their gold, it was a wonderful system. Right? Everybody was singing the praises. American standard of living is just the best in the world. Ah, so great. Now we don't have that. We have a promise to pay, and a guaranteed promise to pay, and zero doubt that there will be paid. But the problem we'll face is that the purchasing power behind it will be gone. There is no ability to retain that. Let me play it again.
Cannot guarantee their purchasing power. And this is why the issue ultimately has got to be resolved in terms of, do we have the material goods and services that people will need to consume?
Do we have the material goods and services that people will need to consume? You see, he's addressing the Cantillon effect. He's just not saying Cantillon effect, but he's calling it right there. Do we have the material possessions in our area in order to produce what it is that we need to consume? We don't have that here. We do not have the material possessions. Let me back it up. This is so critical. Like, he was... To think that 20 years ago, they were well aware, right, of what was happening, but yet nobody really took it into consideration. Like, they heard his words, or like, oh yeah, he said it, right? And they can't guarantee the purchasing power. And it was like, no, did you hear what he is really saying? We do not have the material possessions here. That's the problem, right? Back it up.
Resolved in terms of, do we have the material goods and services that people will need to consume, not whether or not we pass some hurdle with respect to how legal financing occurs, because the financing is...
It doesn't matter how you do it. Like, you can push the numbers around all you want. That doesn't matter. Do you have the material possessions? Do you have the ability to produce the things that you are consuming? If you do not have that ability, it doesn't matter. You're not going to be able to buy it in the future because you will lose the purchasing power to do it. This is critical to understanding it. There's nothing anybody can do. That's why I keep saying it over and over again. You have to take this into understanding that you are responsible for yourself when it comes to this. And this is putting yourself in a position in which that you can deal with the fact that this is going to happen. Right? Like, let me back it up one more time so we can get a clear understanding of it, because this is so important. Right? This is so important that we just don't have what it takes in order to succeed in the way that people are anticipating or hoping or wishing or dreaming or believing that there is something that could come in and change the way that things are going down, but there's not. right? This is the situation, is that we have to face the facts that we just don't have the material possessions here. Let me back it up and play it again.
Resolved in terms of, do we have the material goods and services that people will need to consume, not whether or not we pass some hurdle with respect to how legal financing occurs, because the financing is a secondary issue, and it's the means to create the...
Financing is the secondary issue. People are like, what are we going to do about it? What are we going to do? You got to tell me. Don't worry about all that other stuff. What are we going to do about the... And I'm like, that's the secondary issue. The real issue is that your good manufacturing capabilities to have here in the United States that would have that high standard of living left a long time ago, and it ain't coming back. And there's nothing that they can do about that. There's nothing they can do. All right? Let me back it up again. I just, when I hear this stuff, it's just like, it's like, man, it just ingrains it into you, you know?
How legal financing occurs, because...
Doesn't matter.
The financing is a secondary issue, and it's the means to create the real wealth, not an end in itself.
It's the mean, right? How is it that you use financing to go out there and acquire the things that you need, right? We use the finance to buy cash flowing assets, start businesses, go out there and do things that are going to be productive. Most people go out there and buy luxurious experiences, and that's the problem we face today, right? I mean, this is coming from 20 years ago. Discussing the Senate Banking Committee, talking about what it is that they should be doing about Social Security. Should we maintain the fundamentals of Social Security? It's just like, well, yeah, we should absolutely maintain it. The only problem is that by the time we get to into the future, the ability for the people to use their Social Security to have the standard of living that they were hoping for from that Social Security payment will diminish over time until it doesn't do anything anymore. Right? That's what he's saying. The more I look into this stuff, the more I think about it. It was just like he's explaining the Cantillon effect. He's just, explaining it in a detail that has now got the government having to react to the situation. Right? Like, here we had this great idea of Social Security for all the people when we were a great giant manufacturing powerhouse, and now we're not that anymore, and Social Security isn't going to buy anything because we don't have the material possessions here to do it. Right?
And we can guarantee cash benefits as far out and at whatever size you like, but we cannot guarantee their purchasing power. And this is why the issue ultimately has got to be resolved in terms of, do we have the material goods and services that people will need to consume, not whether or not we pass some hurdle with respect to how legal financing occurs, because...
Right. See, this is why people just don't understand, like when they say, well, a UBI, and I'm like, this legal, some crazy legal way of financing and giving money to the people is not going to solve the problem when you do not have the material possessions, the ability to produce what it is that you are consuming. That is our freaking problem. That is it right there in a nutshell. People say, oh man, if the rich would only do, if they weren't so greedy, if they, all and on and on and on. And I'm thinking, none of that's it doesn't matter. None of that stuff matters. I mean, yeah, it sucks. Don't get me wrong. It's a painful experience to watch it happen and then know that you're not part of it. Yeah, that part is a bummer. But the real issue is that this nation doesn't have the material possessions to produce what it is that it's consuming. That's the problem. There's nothing you can do about that anymore. The only thing you can do is lower your standard of living, which is the pain that people don't want to face. Yeah. I mean, he sums it up so quickly. 1 minute and 18 seconds is all it took to describe exactly why it is that this is not going to be solved. All right? Like he has no idea because there is no capabilities of fixing this. Let's listen to it one more time in its entirety.
Do you you still believe that we should maintain the fundamental principles of Social Security as it did in 83?
I think we should maintain the principles of Social Security, but I think the existing structure is not working. And that until we can construct a system which creates the savings that are required to build the real assets so that the retirees have real goods and services,
Right? Until we can construct a system that can produce the savings. Is that what he says? Hold on.
until we can construct a system which creates the savings that are required to build the real assets so that the retirees have real goods and services, we don't
have that system, right?
have a system that's working. We have one that...
So that's the problem. We don't have a system that can produce the real goods and services that can be consumed by the retirees. We don't have one. If we produced goods and services here in the United States to that level, none of this would be a problem. But we're not producers. I mean, we produce some stuff. We have things that we produce. People argue with me all the time. It's like, oh man, all kinds of stuff gets manufactured in the United States. You're absolutely right. Look at the trade deficit. We import far more than we export. We import stuff to have the high standard of living that we have maintained here in the United States for such a long time and think that we're somehow entitled to. But we raise this standard of living due to the manufacturing that we done decades ago. Right? We don't produce the goods and services here to now provide for the retirees. We can give them the money, but if you don't produce the goods and services, then what is going to happen is it's going to become ever increasingly more difficult to get those goods and services from other nations out there and to provide the money to the people to do it if you're not providing the goods and services yourself. That's all there is to it. Right? I mean, it's so simple. He describes the Cantillon effect so well inside of a minute and 18 seconds. Let me back it up just a little bit. I just can't help it. Oops.
So that the retirees have real goods and services. We don't have a system that's working. We have one that basically moves cash around. And we can guarantee cash benefits as far out and at whatever size you like. But we cannot guarantee their purchasing power. And this is why the issue ultimately has got to be resolved in terms of, do we have the material goods and services that people will need to consume, not whether or not we pass some hurdle with respect to how legal financing occurs, because the financing is a secondary issue, and it's the means to create the real wealth, not an end in itself.
See that? This is why, I love the idea that we want to bring manufacturing back to the United States and that Donald Trump is doing his best to do that, and all the other efforts with the tariffs and all that is somehow going to do this, and it's absolutely incorrect. It's not going to work. It's no way possible. I don't care what kind of laws they pass. I don't care what kind of efforts they go through. I don't care what kind of little magic tricks they play within the financial game. There is no way you're going to bring back manufacturing when you have somebody else on the globe who is willing to sleep on the ground. You have to compete against that. That's the issue. When you dive into a luxurious experience, raise the standard of living, you make yourself uncompetitive against other people out there in the world. He's describing it right here, the problem that we now face. You can provide Social Security payments to any degree of any size as far out as you want to go, with zero chance of default because we got a printing press to deal with it. The problem that we face is that we do not produce the real goods and services here in the United States that those retirees and those consumers would need. There's nothing we can do to change that. That's sad, it's scary. However, you can figure out what it is that you need to do to deal with this situation, knowing that this is the way it is. See, one of the things I think about, I was even talking with my wife earlier today, and I'm thinking, well, we have a fixed income that's coming through Social Security, maybe, right? Guaranteed it's going to be there, no doubt, right? There's a printing press to pay for it. There's zero doubt in my mind that the money will be there. Now, whether or not it has a purchasing power is different. So maybe if I just think about my Social Security payment, just making the mortgage payment, and if that's all it does and that's all I expect it to do, then those two can cancel themselves out. And I can focus in on what it is that I really need to do, knowing that Social Security really isn't going to be there. But if it makes the mortgage payment, cool. See, now this is how I think about it. It's because I just don't anticipate Social Security being there. I never have. But knowing that there is zero chance of default and that they're going to be making the payments to any degree into the future, knowing that the mortgage is a fixed payment and knowing that Social Security could be fixed, if the two cancel each other out, great, man, let that go and I can move on to other things. See, this is the kind of attitude that I take towards these things. It's just like, I don't expect the Social Security to provide me with anything. I can't expect it to provide me with the standard of living because it won't. He even says it right here. If you do not produce the goods and services within the United States to trade to the people who are consuming it, then you are not going to be able to continuously provide financing to these people in order for them to buy those goods and services that they don't exist here. You'll have ever-increasing amounts of foreign imports coming in and ever-increasing amounts of exportation of the money. Ever-increasing amounts of debt issuance. Ever-expansion of the inequality and more problems with the manufacturing state leaving. There's, like, again, man, the more I study this, the more I look into it, the more I go and I review things like what Greenspan was saying, which I've heard this a million times, but to hear it just recently again, it just, it became so much more clear through the Cantillon effect what it is that's happening here. All right, 22 minutes into it. Deplorable. You have no idea. The behemoth within the asset market is amazing, and what makes gold, Bitcoin, and all the stock market go up and down together. I will retire with my Trump coin. The amount of debt doesn't matter. It's how it's created. That's the problem. The place of all the COVID printing went to, it's not inside your market, it's inside the behemoth. I like the deplorable. Behemoth. All right. Unfortunately, when Greenspan used to talk back in the day, nobody understood what he said. Well, he spoke very clear for a minute and 18 seconds. I mean, he spoke very clear on what it is that's happening here. We do not have the real assets for the retirees to consume. We have to buy it from foreign production. That's the problem that we face. We cannot guarantee the purchasing power of that money. We can guarantee they'll get the money. But if you don't have the real assets here, like, listen, like he's clearly says it. Like, it's not a confusion.
Cash around. And we can guarantee cash benefits as far out and at whatever size you like, but we cannot guarantee their purchasing power. And this is why the issue ultimately has got to be resolved in terms of, do we have the material goods and services that people will need to consume?
Do we have the material possession? What was it? The material goods and services?
It's got to be resolved in terms of, do we have the material goods and services that people will need to consume?
Do we have it that people will need to consume?
We pass some hurdle.
So that's it, guys. I mean, I don't know what it is that people would anticipate that could happen, but I see nothing, literally nothing out there short of depressionary effects to the majority of the people out there to suffer a lesser in their standard of living so that they can be competitive against the rest of the world and we can produce those goods and services here in the United States again. I do not see that happening. I see ever expansion of debt, currency, war, and deficit trades. because any other direction is going to be pain and suffering for the majority of the people out there. All right. I always lived within my means. Only the big spenders will take a haircut. No, not only, not if it goes bad. I mean, it's everybody. Because, I think a lot of times, it gets misunderstood quickly that it was just like, well, I lived within my means and I have, a decent savings and all that other stuff. If you're not producing the goods and services here and then you get cut off, I don't care how much money you have, you're not buying anything. Right? And the little bit you do have, you're probably going to end up having to try and do your best to hold on to it, since cash isn't flowing anywhere. You're not getting any more. Right? That's like, to me, when I think about those kind of times, all of a sudden money is just like, it's non-existent anymore. Right? And I got to figure out a way in order to preserve food, because anything else is very questionable. It's going to be questionable on whether or not you're going to be able to retain your house. Because you think about it, the only reason why you have a house right now, if you're buying one or living in one, is because the government has property rights. Now, you can stand out there with a gun and try and protect it, but, you got enough people coming after you. There ain't nothing that you can do to hold on to that thing if you don't have the government backing you. That's dangerous. That's dangerous as hell. So there's really nothing that you have except for your material possessions and your skills. That's it. There's nothing else. Everything else is essentially an illusion. Even Greenspan here is saying it, Your Social Security, that's an illusion. It isn't going to buy anything into the future if you do not produce the goods and services here. If you don't do that, then there's nothing that, it's just like, we promised to pay you that dollar amount. But the chances of you getting it, not so good. Not so good anymore. So having the money isn't the big deal. It's having the goods and services, having the capabilities. See, when I think about it, it was just like, when it comes down to it, there's only what is it that you can do and what is it that you have. Not what it is that you've been promised. I can open up an app all day long and look at this promise and that promise and this promise. All these promises. People say, oh, look at this digital asset that I have. And I'm thinking, yeah, going through another promise, through third-party going through third parties. And so, again, what do you do about the national debt? Nothing can be done about it. I mean, it sucks that it continues to go deeper into the hole, and that it's going to go deeper into the hole, and that it's going to cause the issues that we now face. And it's very punishing feeling and deliberate feeling and all the other stuff that goes with it. And, kind of absolutely right. There's a big conspiracy theory behind it all. And, there's plenty of books and people who talk about that. And there's really nothing that you can do to change any of that stuff, but you can change how it is that you are going to conduct yourself if you are suffering the consequences of, I'm waiting for the collapse and failure to happen. I mean, if that's the case, good luck, right? I mean, sitting around waiting for failure, I don't know if that's how I would invest. I invest into success. I don't invest into failure, right? I'm looking at things that are moving up, not things that are crashing. Some people are really good at finding bad. Right? They find bad and they short it. They say, "Oh man, this is the hell to pay right here, and I'm going to profit off of it, and watch me short this particular, investment." And in that case, I mean, yeah, that's probably wise decision making, especially if you can see it clearly. But for me, myself, I look at things that are going to be progressing to something that feels to me like it's a good thing, and headed towards that. Like, I don't think about the negative. Right? Is there negative things? Absolutely. I mean, the fact that Social Security isn't going to buy anything is a very negative thing, but then it's a positive to know that it's not going to buy anything, and maybe, hell, it can pay my mortgage payment and I can move on to other things and figure out what it is that I need to do. Is that a bad thing? No, it's a good thing. It's fine. There ain't nothing wrong with that. I mean, as long as we know, right? It's the promise, and then the promise not being delivered. That's where we start to fail. Right? We set our expectations up for somebody to say, "Hey, man, where's my retirement? You said it was going to be here," and I was like, "Well, we said it was going to be there. We didn't say it was going to buy anything." Right? And it was like, "Oh man, I missed that fine print. Dang it!" Alrighty. Listening to yourselves wake up. We're heading off a cliff. There are no savings. This is insane system. We're just enjoying things as much as possible in the borrowed time we live in. Merriman. Thank you so much for the comment. I am waiting for the apocalypse because I have a list of disposables. Okay. Become a producer, and you can survive any crash. According to the Melody Right, 90% of the residents' loans are backed by government now, maybe the largest difference between any pending housing downturn in 2008. If this is coming from GMA Merkel. If this is natural course, then the other countries will also follow the same. Doesn't that create a teeter-totter effect? Well, yeah, but you also got to think, like, what is it that the other countries would have to do in order to, like, say, replace what it is that the United States is doing? And no other nation is going to go through it, essentially, since there's no other nation that's in a position that can do what the United States is doing, and that is they have the ability to go into the sheer amount of debt issuance that it does. Like the demand for U.S. treasuries is incredibly overwhelming to the United States and to the Federal Reserve and to the world essentially doing world trade. Most people who look at the U.S. treasuries on the like foreign, like foreign holdings idea. They're like, oh, everybody hates U.S. treasuries. They don't want the dollar. They're getting out of the dollar. Everybody's pissing on the dollar. And I'm thinking that is so far from the truth, right? I mean, you just go and look at it right now. Here, let me bring it up. Let me see if I can find it here. See, when I hear people say that, the one thing I think, well, just go in and type in foreign holdings of U.S. Treasury debt. Where is it? Boom. Okay. So this is a graph, OC, the held by private foreign asset transactions. And although it's down a little bit right now, let me see here. Let me bring it up over the last 10 years. Okay. So it is down a little bit right now, but this is a chart over the last 10 years. And of course, it's backwards because my YouTube always flips the damn screen. But you can see right there, even the transactions over the last 10 years, it's moving up, not down. Right? And if you look at like any graph that you find out there that talks about the debt issuance and the encompassing of that debt around the world, it's only getting bigger. People use U.S. treasuries as currency. So when transactions are happening on a global scale, like between nations, and they're doing transactions between themselves, and they're doing it in dollars, generally they're not even doing it in dollars, they're doing it in U.S. treasuries. All right, because treasuries ends up being the currency to transact with, because it's almost as good as cash. It's the most deepest liquid market. It's like almost as good as cash, right? And this is where I think a lot of people end up getting like lost in the idea of what it is that they're holding U.S. Treasury debts for, right? Like a lot of nations think, oh, they're holding it as an investment because it's safe haven and all this. And it was like, well, yeah, I mean, that is true. There's, that reason that, every other nation is using it. And so therefore they have to hold it. And then they're, in the idea that it's a safe haven comparatively to the rest of the nations out there, that, if there is a safe haven, the dollar would be considered it. But ultimately, if they want to do a transaction with another nation, they have to have the currency to do it. And then since no other nation is providing debt issuance to the scale that the United States is doing, there's really nothing else that anybody is going to be able to use. Even if they wanted to use another currency, they don't go into debt enough to provide enough of essentially replacement to the U.S. treasuries. So even if they want it out, they're like, damn, I still want to eat. I still want to do the transaction. I still want to sell my product, to that other nation out there, or I want to buy that product from that other nation out there. And since there's really no other currency out there that's available to do the transactions, and even if there was, there's not, like, I mean, even if they were accepting another nation, the other nation's currencies, they don't provide enough of the debt in order to facilitate all the transactions that are being done. Like, not even the United States is doing it enough because the demand for it is going up. You can see the trajectory of it. Man. The only thing that would slow that down is depression, cancellation of debt, right? Defaults, horrible, horrible experiences, starvation, famine, cats and dogs living together. I know what we can do to help. We can bring in a whole bunch of immigrants who don't know how to do anything, and that will help. What's up, all nighter? What's up, Brody? Thank you guys for being here. That's where the stable coins come in. Okay. George Soros, right hand man, Scott Bassett. Yeah. This is fun, guys. We got 36 minutes into this live stream, 192 people watching with 47 likes. Thank you so much for hitting that like button. With 192 people watching, go out there and hit that like button. We can have it well over 100 right now. By hitting it, we'll get the YouTube algorithm to spread the video around, get more people to join in. This is important stuff to internalize, right? Because I think a lot of times, people who look at the economy have one of two expectations that come from it. It's usually one of two. One, how do I make money? Right? And that's up to you. You got to take this information, internalize it, look at it, what it is that you got going on so that you can make the best decisions for yourself. And when it comes to investment, that's a very personal thing. Go for it, man, right? The information's great. I love it. Hope it works for you. I try to position myself for it too, but this is not an investment channel. This is economic forces and how they play out, how money flows through the economy. The other thing that people study the economy for, or at least listen to people or listen to economists or whatever, the other thing they're anticipating or expecting from the information is how do we fix the problem? Like, how do we make everybody's lives better with this information? And I think to myself, there is literally nothing that you can do to change somebody else's life. And I don't care if it's economics or anything else. Right? You can do your best to provide them with encouragement and support and even effort in whatever. But if that person isn't willing to receive that to the best of their capabilities to then use it and progress, then it's a lot of time and effort and energy that goes through it. But is that something that is really helping? Like, helping is something that has a symbiotic relationship to it. Like, the two people get together and all of a sudden, like, the matching of skills and understandings and forces come together, and all of a sudden this magical thing that starts to take place from it. It's like, wow, man, talk about, awesomeness. But if it's constant effort to say, hey, we got to raise, we got to do all this, we got to make sure that all these people are taken care of and all this other stuff, I think to myself, man, I don't know if that's necessarily the direction that we should go. Understanding how it's happening is very critical for your own decision making. Oh, geez, Freddie scared the hell out of me, bud. What's happening? You got to go or something?
Yeah, we thought you were going to do it pre-recorded.
No, I decided. All right, give me like 10, 15 minutes and I'll come in. Okay, man?
Okay.
All right, thank you. Freddie scared the heck out of me. All right, Act 4081408. Thank you so much for the $9.99. Anyone ask about why gold is mooning? This is funny how I know Freddie, right? I'm all into it and intense. I mean, honestly, I think Brent Johnson's theory about the milkshake theory and how gold and dollars can rise together. And although I talk about through Greenspan here, the idea that dollar will lose its purchasing power over time. And then at the same time, there's global demand for dollars that's going to cause like a strengthening for dollars, which seems like counter to, like oxymoron, kind of counter, contradicting, God, Lord. contradictory. Anyway, it's not really, when you think about it, in the sense that the dollar gets compared to a basket of world currencies that are out there. And so if they are not nearly in demand as much as the dollar is, the dollar in demand against those other currencies can show it being stronger than those other currencies. And that's how they kind of reflect what the dollar is as far as strength goes. It's comparatively to a basket of other currencies out there. Now, gold is comparatively to everything out there, but it's priced against dollars. Right? So people say, oh man, so the gold and the dollar, this is like, these two are essentially reflective of each other. One goes up, the other one goes down, one goes down, the other one goes up. But that's not necessarily the case, right? Because here we see the dollar and gold somewhat rising together. Now, if you just separate the two and say dollars have demand and gold has demand, right? Not how much people want to be in gold, and if they want to be in gold, they don't want to be in dollars, and if they want to be in dollars, they don't want to be in gold. Kind of take it away from that, right? And to say there's lots of people who want to be in dollars, and there's lots of people who want to be in gold. Why do they want to be in these two different things, right? For the same purpose, essentially the safe haven of it. Now, for the most part, when you looked at bonds or the dollar, you looked at something that was going to have some sort of return, like a little bit of a yield to it, right? So treasury bonds became it. So usually it was like U.S. treasury bonds versus the dollars, U.S. treasuries being, or versus gold. So U.S. treasuries being like the dollar and gold being kind of versus that. People would say, oh, the U.S. treasuries is an investment because it has a yield, right? It'll pay back the principal that went into it, and it'll have some sort of return to it, a little bit of a yield, where gold just sits there, right? So an investment and a speculation, but they were both looked at it essentially the same way. Where do you put your money, in case you are concerned? Well, lots of people are now screw the dollar mentality. They don't want anything to do with it. There is so much talk out there, sanctions and failure and, all the other stuff that's coming from the Trump administration that doesn't give them a whole lot of other places to put their money. Like, where is it you're going to put your wealth? You can put it into real estate. You can put it into foreign assets or something of that nature. But if those things concern you, generally you'll go into U.S. treasuries. And if that concerns you, it just leaves the gold. Well, this is where we have the milkshake theory really playing out, in that the concern about what it is that's taking place throughout the globe is forcing the safe haven run, which is causing these two to elevate together. Maybe not on the same plane or at the same time, but this is essentially playing out through the idea of what Brent Johnson has been describing for years now. All right. Gold isn't going to have a meaningful pullback. I mean, I wouldn't. I don't know if I would necessarily believe that. Like, if you have the Federal Reserve stall out on interest rates because they're at neutral and that's where they wanted it to be, and at the same time, the alleviation of tariffs was to be brought to attention, then you would most likely see a very stimulating effect coming from that, and yet they don't really have to do anything, right? See, this is really where I think a lot of times that the idea of what it is that the Federal Reserve is doing with monetary policy ends up getting very misunderstood or obscured, in the sense that what they are doing is more about the expectations coming from the market of their behavior as opposed to the actual actions, right? And I've tried to say this over and over again. In fact, just recently, there's been a proposal to how it is that the Federal Reserve wants to deal with their Fed funds rate. Let me see if I can bring up that article real quick. Hold on. And then I got to go because the family wants to go to town, and it's going to be dumping buckets here in just a little bit. We want to get back here before it really starts to rain. But I really want to share this with you guys here real quick, because this is coming out of Reuters here, and this is the Dallas Fed chief's rate target reform welcomed amid very uncertain timetable. right? And so essentially they're Lori Logan had proposed this idea of how it is that they were thinking about changing the way the Fed funds rate is basically conducted. And although it's probably like a big deal for us, it's probably not going to be a big deal for anybody else in the, out there outside of like, the people who are like hyper focused on the Fed, or maybe, all the hedge funds and people who are into investments. But this is the part that I wanted to get to. Hold on here. I got to find it in this article. Because, okay, here we go. William Dudley. Remember this guy? He's the former head of the New York Fed who also led monetary policy implementation work, said Logan's proposal is, quote, a perfectly reasonable thing to do. Perfectly reasonable thing to do. This idea on how it is that they are going to conduct the Fed funds rate and where it is that they're going to position and stuff. And we'll break that down in another video. It's not important right now because they're not actually doing it. When they actually do it, it'll be important. But this is what I thought was interesting. He says it's a perfectly reasonable thing to do. And then, quote, while adding such a move would be technically, quote, not really a change in terms of how monetary policy is actually conducted. Right? Because it's their words. It's not the changing of the Fed funds rate. I try to explain that over and over again for the people that they can change that Fed funds rate, but it's not nearly as important as the message that is delivered about it. And here it is, Dudley is essentially saying that, right? He's saying, like, while adding such a move would be technically and, quote, not really a change in terms of how monetary policy is actually conducted. All righty. You guys in the chat have really drank the Chinese fear-mongering Kool-Aid. It's okay. Gold was inflated by retail traders and bears. You're better off building a bunker if you thought scared of collapse. Huh. Interesting. You know what I think is interesting about, like, these kind of comments? I gotta really go, guys, but what I think is very interesting about this is that instead of, like, looking at the information and giving it a belief that there is a way that you can position yourself so that you can have the best outcome in your life, you're thinking, oh man, instead of buying gold and thinking that you guys are nuts and the government is crazy, you should buy a bunker and get into that and blah, 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 blah. I hear like all this kind of negative talk about it all, and to me, I think to myself, when you have that sort of energy going into not only the conversation, but then the reflection that you get back from it is going to be essentially somewhat of the same, right? So if you have like this negative feeling when you're going into it, oh, you guys are a bunch of, morons, blah, blah, whatever. The exact reflection that you get from the world is the world is full of morons, right? And that's your whole existence is nothing but a world full of morons. Well, when you are describing something outside of yourself that you don't like, you are actually describing the worst of what it is that's going on the inside. So you think about that when you actually call people out and you're saying, oh man, these morons, these people, these, right? You are actually describing the worst of what it is that's going on inside of yourself. And then you fill the world up with that. It's good times. All right. Thank you very much. As always, Simon, have a great time with the family. You too, Brody. You guys are awesome. Thank you so much for being here. I really appreciate all the support. Those thumbs up. We got 66 thumbs up. I got 175 people watching right now with the $9.99 in super chats. Thank you so much for supporting the Uneducated Economist. We're going to come back real soon to start breaking down some of these Fed speeches. I know I've been promising them, but I am going to come back out here probably later on today and start breaking down these Fed speeches in the members only live streams. So if you haven't become a member of the channel, It's $1 a month. For $1, you get to have access to all the member-only live streams we've done, where we have broken down many Fed speeches talking about monetary policy and how it is that we can internalize that monetary policy from a working class point of view, so that we can make the best and most appropriate decisions for ourselves. And I've had many people now email me and comment and talk about what it is that they have done in their lives that is very unique from anybody else out there, based on the information that they have gotten from this channel. They internalized it and they saw for themselves the things that they needed to do with their skills, with their position in life, their fact that they may be 18 years old or 80 years old. It doesn't really matter. We all have to internalize this for ourselves and make those right decisions for ourselves. And here on this channel, we discuss what it is that we need to do to figure that out. All right, Uneducated Economist, you let me know.